July 9th, 2024. About once a month, you end up getting a day like this where the market more or less just goes sideways the whole day, and you never really get the breakout. Vast majority of days, the saying is 90% of days you get some sort of credible swing in the opening range, and maybe it's even a little bit more than that you get a credible swing in general. But again, there's about 20 trading days in a month, and about once a month. So I guess suppose maybe I don't know 5 to 10% of the time you get a day like today where the market it just ends up going sideways all day, and breakouts keep failing, and nothing really works, and everything is pretty much just limit orders. So not really ideal. We did something pretty interesting today. I actually got to add. Market repeated the pattern on the open that we had in here. So you can see we had a breakout yesterday. So let's look at yesterday first. We had a breakout of the prior day's high, and then a bear bar, but a tail on the bottom. A potential high of the day, not very credible, and then a reversal attempt up, a failed breakout, and then we got a downside breakout. Today, we again had a breakout of the prior day's high. Not as much of a breakout. Obviously, there was an open gap here, and we have an open body gap here, but it wasn't as strong. And then a reversal attempt down on bar 2, a bear bar closing near its low. It's a more credible sell below 2 today than it was yesterday, but it's still only about a 30% chance that bar 2 is the high of the day. And I'm a bit of a hypocrite with marking bar 2 as a short, because let's say we sold off from bar 2, I probably would have marked it as a credible short. But the thing about selling trades like bar 2 is that you're selling with a low probability of success. So it's really not a very good trade unless you're an algorithm and you're willing to win 30% of the time. It's much harder to take as a person where you want to win a lot more than 30% of the time. So yeah, you can sell below bar 2. I actually didn't add that to those either. My 1 in 3. But pretty much only a 1 in 3 chance that bar 2 ends up being the high of the day. So it's really not quite worth taking. And the problem is there are probably more sellers above the 2 high than there are buyers. So again, bar 1, a bull bar, breakout of yesterday's high, probably going at least a little bit higher, but I'm not sure how much. A reversal down on bar 2, a bear bar closing near its low. It's potentially, again, a failed breakout of the prior day's high. We might sell off for a couple of legs sideways to down. However, the problem with that is that the bar 1 wasn't, the world's worst buy. We had a reasonably big gap up. And then essentially, when you get that gap up, you can look at the gap as a bull bar. And then consecutive bull bars with bar 1, and bar 1 closing reasonably far above yesterday's high. So the traders who bought above 1 and bought the close of 1 should be able to make money if they scale in. So that's one of the issues with selling below 2 as well, is that we should get back to that 1 high. Bar 3, it's a high 1 for the bulls, just like yesterday, but it's not a very strong high 1. Again, bulls are hoping that we have consecutive bull bars, essentially with the gap, and then the big bull bar on bar 1. And they're hoping bar 2 ends up failing, and we have a high 1 on bar 3. So they're just thinking this is a breakout, and now we have a high 1, and we're in a bull trend, and hopefully this will be the start of the bull channel upwards. However, to me, it's more likely that we're just going to continue sideways here, kind of like we did over here. So probably better to wait. Bar 4, disappointing follow through. If you were buying above 3, you wanted to see a really big bull bar closing near its high, something that's trapping in traders, and instead got a doji bar. So is it technically follow through for the bulls on bar 4? Yeah, it is, because when you get a bull bar or a non-bear bar after your entry bar, it is technically follow through. However, 4 is not ideal follow through. You really wanted a strong bull bar, because when you see bar 4, you still don't know how the bulls who bought above bar 1 feel. If those bulls are looking to sell out of their longs, you were hoping for confirmation that they didn't want to sell out of their longs, and you wanted to get a close above the 1 high. So if you're buying above 3, you really wanted to see a close somewhere up here, confirming for the bulls that were going higher. Instead, you get this, so still uncertainty for the traders. The bears want to see 4 as, they're hoping bar 2 is the high of the day, and this is just a pullback, and so maybe a breakout pullback sell on 4, double lower high, double top, but it's really not very good because it's a doji bar. probably more buyers below 3 or below 4 and below 3 willing to scale in. So I don't think we're going much lower at all. Outside up bar on bar 5. So good for the bulls. We might have to go a little bit higher, probably above the 3 high. But thing is, when we get above the 3 high, what's probably going to happen? There's probably going to, or sorry, the 2 high, there's probably going to be sellers up there. Additionally, bar 5, it's subtle, but it was not able to close above the bar 4 high, which is a little bit disappointing for the bulls. They were hoping bar 5 would close above bar 4 high. Instead, it closed at the bar 4 high, which is disappointing. You can see on bar 6, we tried to rally, but we ended up getting a big tail and essentially a failed breakout of yesterday's or of the high of the day. So a failed breakout of the bar 3 high, bar 2 high. Traders who sold below 2 maybe scaled in above 2 and might use some sort of sell-off to exit their trade with a profit on their second entry and get out around break even on their first entry. And bar 7 is a low 2 short on the open. It's a micro level top with 6. I think this is a much better trade than selling below 2. I think the thing is, if you're selling below 7, it's also a credible high of the day. And one of the reasons why I thought it was a better trade than a lot of high 2s, low 2s on the open is because of the daily chart. We had a disappointing bar here, so it was reasonable to think that that the bulls who were buying for any reason were going to be disappointed in how this closed, and they were going to start to exit their longs. And that would cause some sort of big bear bar. Again, it's not super likely that's going to happen, where we're going to get a big sell off on this day, but it's definitely possible. And if you're willing to take a sell below 7 and just bet it's the high of the day, you're only risking 4.5 points, and you could easily make 20 points. So it doesn't have to happen all that often in order for it to be a profitable trade. So I think it's a reasonable thing to do to sell below bar 7 as a low 2 on the open and take a chance that we end up getting some sort of swing down. I know that you could argue that this is a low 1 for the bears on bar 2, and the low 2 was bar 4, and bar 7 is a low 3, and that's fine if you want to say that. But the way that I see it is that this is one leg up and then a pullback on 2, and 3 through 6 was a complex second leg up. So I think 7, I still personally think of 7 as a low 2 on the open. Bar 8, another bear bar, but a tail on the bottom. So not as good as it could be. It's still follow through for the bears, but you have to keep in mind that you're probably not going to go straight down in this situation. We've had quite a few decent bull bars. So the good news, though, is if you're betting on it being the high of the day, for the most part, you can kind of just wait until you get a really strong bull signal bar, or you can just let yourself get stopped out. Some traders will do that. But definitely credible to sell below 7, and you get 8 as follow through. Like I said, it is follow through, but you're hoping for a bit more. 9 is disappointing, but relatively expected. You're probably going to get some sort of pullback after the big tail on 8. And you're around the open of the day and the middle, I suppose the lower middle of this trading range. So I wouldn't be surprised if we ended up getting some sort of bounce relatively soon. But also, again, trading range open, so it's still credible to think that bar 7 is the high of the day, and 9 is just a pullback within this bear trend. 10 is a low 1 short. So what do the bears see? The bears see 1 and then a pullback and then a low 1 short on 2. So they're seeing a bear trend here from the open. The bulls, what do the bulls see? Well, it's pretty tough because this is potentially 3 pushes up, bar 1 and then 3 through 6 and then 9. So it's possibly a third push up. I suppose the bulls, they do have the fact that we have higher lows and higher highs for the most part today. So bar 2 and bar 7 and then bar 1 and bar 8, and they're hoping that we're going to trade up above the bar 7 high and create another higher high. So they're hoping, maybe breakout, on bar 12 or something. But there's not a lot of strong arguments for the bulls right now. I think the bears overall have an edge, but again, this is a trading range open, so nothing is all that clear. 11, a bear bar closing near its low. It's good for the bears. The bulls are hoping this is a second leg trap. 1, pullback, 2, and we're going to get a reversal up from the low of the day. Some sort of, and it's funny because we tried to do this yesterday. If you watched my review yesterday on this bar, which is, I'll open up the study. On this bar 11, yesterday, if you watched the review, I mentioned that if bar 12 had been a reasonably big bull bar closing near its high somewhere over here, then it was possible, closing above the bar 9 low, even in this scenario, then it was possible that we were going to get some sort of swing up. And you can literally see the exact same sort of thing happened. It was 1 bar later, but I don't think the 9 low mattered as much here as it did over here, but you can buy above bar 13 because the traders who sold above 12 might get trapped selling above 12 when they see 13 closing near its high. We also don't have, any closes below the moving average today like we didn't yesterday. So this I think is what the bulls were trying to do over here, but they failed. Here they ended up getting the credible bull bar on 13. But anyways, like I said, 11 a bear bar. Bulls are hoping it's a second leg trap. The Bears, they're hoping for one more really strong bear bar, potentially, get us down to yesterday's close somewhere in here and some sort of measure move down. The daily range is really small. It was true all day that the daily range was small and that the daily range should probably double for the vast majority of the day. That was true. At a certain point, you kind of just got to accept that this is going to be one of those really small days. But, when you're only 10, 11 bars into the day, and the daily range is 13, and the average, even in the smaller days over here, yesterday was a small day on Monday, and it was still a 25, 26 point range. You got to be expecting that we're probably going to get some sort of double of the daily range. 12, unable to close below the moving average. It's kind of bad follow through for the Bears, it is bad follow through for the Bears who sold below 11. It's important that it closed below the bar 1 low, so a little bit better for the Bears, but disappointed that it could not close below the moving average. It's a high 2 for the Bulls. The high 1 was bar 8, disappointment 9. And so high 2, 12, but again, a bear signal bar, so not as good as it could be. 13, a micro double bottom with 12. It is true that 12 is your signal bar for the high 2, so it's not that great, and 13 would be your entry bar. So again, not as ideal to have a bear signal bar, but I still think the buy makes a lot of sense, taking a chance that we double the daily range to the upside. 14 consecutive bull bars follow through. We're probably going higher. I'm not sure how much higher, but the Bears are going to exit above 13, and we might get we got follow through on 14, so we might continue to get follow through. But you could also look at it as leg 1, 13, 14. So even if we start to pull back, you might end up getting some sort of second leg sideways to up from how strong these two bull bars were. 15. So we have 3 straight bull bars. Good for the Bulls. Again, we're probably going at least a little bit higher. I would imagine we're going to get a second leg up. You can see we did end up getting a second leg up. It's just the pullback was a lot deeper and more frustrating to sit through than most traders wanted it to be. It's pretty hard to buy. Excuse me. It's pretty hard to buy the close of 14 or the close of 15 and sit through, the entire pullback and then, all that just to get out around break even. But anyways, 15, another bull bar. We're probably going at least a little bit higher, 3 straight bull bars, expecting a second leg sideways to up. And then 16 is a double top for the Bears with bar 7. You could argue it's a head and shoulders top with 2, 7, and 16. Head and shoulders tops are the same thing as truncated wedges. You can see we got another one here. 1, 2, 3. Again, just ends up being a truncated wedge. You can look at it, whatever pattern you want to call it. It's fine. The name doesn't matter. It just matters that you know what the forces within the wedge are doing. The problem with 16 is that it's a bull bar. So while, yes, it is a double top for the Bears, maybe even a double top bear flag, I don't know, 40% chance that we go somewhere down here. But the problem with that is it's a bull signal bar on 16. So no one really wants to sell below a bull signal bar. Traders would rather sell below a bear bar if they're going to sell. Additionally, the Bears had a reasonably good chance to make the market go down over here, and they failed to do so. So it makes me wonder, you're getting a bull signal bar. So how good is this really going to be? When you get a double top bear flag, about 30% of the time, the second leg up to create the double top is a buy climax. But, again, I don't think you want to sell a bull signal bar. 17, disappointing for the Bears. I think not the best follow through. We are relatively high in the trading range, and the Bulls know the pullback could be deep. So the question becomes, what are traders going to do? Are bulls going to buy around this low and drive the market up for another leg, potentially a breakout above the 18 bar range and a measured move up? Or are we going to head back to the downside? Keep in mind, we did not trade above the bar 7 high. So the Bears, theoretically, who took the low too short, never got stopped out, which is really interesting for what happens on bar 18. Bar 18, disappointment. So it looks like the bulls who bought up here were disappointed enough in 17 and sold out at a 1-tick loss away from the close of bar 16 during bar 18. So they sold out of their longs up here, causing bar 18. Now, if you look at the placement of bar 18, This is the midpoint of the day thus far, is right here. I'm just going to draw it on this side because it's easier to see, so it's not in the middle of everything. But right about there is the midpoint of the day so far, which is also right around the open of the day. So a lot of magnets in this area in the midpoint of the day and the open of the day. If you're a trader at this point, what do you know? You know the daily range is probably going to double. Again, it didn't today. That's unusual. But when the daily range, when you're 18 bars into the day, there's a 90% chance we're going to either break out above here or break out below here, because on any given day, there's a 90% chance we're going to break out of the 18 bar range. You also know that the daily range is 12.75 so far, or 12.75 so far. So again, the daily range is likely to double, and we're likely to break out of the 18 bar range. And this is the midpoint of the 18 bar range. And we have a credible buy above 13 and a credible short below 7. So what's going on here? Well, you can be long, betting we break up to the upside and get some sort of measured move up, or you can be short, betting we get a breakout to the downside and some sort of measured move down. I think the market's pretty balanced right now. Obviously, as it showed, it was pretty balanced all day. But in here, it's pretty interesting when it's around the middle of the trading range, and traders will just, it's probably not wrong to sell the market here, put a stop up here, and hope we get a downside breakout, or buy the market here, put a stop here, and hope we get the upside breakout. I think either one's probably fine. It's more theoretical. It's not as much something that traders do, but I think you can definitely do it. 19, an inside bar, a low one short for the bears, a bear bar closing on the moving average. We're probably going at least a little bit lower, but my problem with 19 is it overlaps bar 18 so much. If you're selling here, you're hoping this is the start of a bear trend. Bear trends generally do not start with a ton of overlapping bars like we have on 17, 18, and 19. And if you're selling here, you're betting on a bear trend and your signal bar was 16. You don't really want to sell below a bull bar. And bull bars do not usually lead to big bear trends. So it's a little bit difficult to be taking the short below 19 right on the moving average. 20, another doji bar. So disappointment for the bull or for the bears who sold. Again, it seems like we're going to end up going more sideways right now than anything. 21, a doji bar. So again, disappointing. If you sold below 19 and you saw 20 and 21, how do you feel? You're probably pretty disappointed in your trade. And this just looks like the middle of a trading range at this point. So the bulls are hoping 21 is some sort of higher low from this move up, and we're going to get the second leg up for them now. And the bears are hoping that this is just a pullback and they're going to get a second leg down. What's more likely, and this is going to get a second leg down, and this is not a good buy signal bar by any means, but it's also true that this should get more of a second leg up than just, basically the tail on 17. So it's pretty tough to say. Again, buying above 21, you'd be buying right smack in the middle of the trading range around the open of the day. So it's really not as good as it could be. 22, a bear bar closing somewhat near its low. Am I selling below 22? Bears are hoping it's a second leg down. Some bears might sell, but again, it's probably a scalp and difficult to manage. So I think it's better for most traders to just wait. I don't know if I said this earlier, I forget, but for traders who are trying to, especially for newer traders who are trying to trade always in, or even experienced traders who are still trying to trade always in and mostly use stop orders, these kind of days are tough. And if you didn't lose on this day, so if you traded this day and you're that kind of trader who's just trying to trade on stop orders and you did not lose, you probably, you did a good job. These days are really easy to end up, just taking the wrong trades, the wrong times, and losing a bunch of money on. 23, another bear bar, probably a wedge forming, 18, 21, 23 of some kind. But again, you're not really willing to buy up here or buy a bar like bar 23 if you're not really willing to sell. It is, yes, no bull close for 6-7 bars, which is good for the bears. However, we're more in the buy zone now. This is big up, this is big down. I think we're in a confusing state right now in the market, and so there's probably going to be buyers relatively soon. I'm looking to buy down here. I'm not looking to sell. And then you get a reversal up on 24. It's a higher low for the bulls from 12. So you could say higher low double bottom with 12 and a truncated wedge, 1, 12, 24. All a truncated wedge is when you have the first two legs of a wedge, and then traders are so eager to buy on the third leg that it never ends up making it below here. So again, you could argue it's, sort of inverted head and shoulders. Generally a head and shoulders, I think, would be more traditionally like this, where you have a head, then this goes below, and then a shoulder. But anyways, so some sort of head and shoulders pattern or truncated wedge. It might be it might not even be inverted. It might just be normal head and shoulders. I don't know. I just think of it as a truncated wedge. I don't really use I use the head and shoulders patterns more in explanation than I do in practice. When I saw this today, my mind said truncated wedge, and I think both are correct. You can buy above 24, it's two legs down, and you might say, well, the bear channel down is pretty tight. And you're right, it is. So if you buy above 24, you should allow for a reversal against you. The key on trading range days is usually to use a wide stop and be willing to scale in. So you buy above 24, maybe you put a stop, measured move down, plus a few ticks, so somewhere down here. And again, you're buying here, you're probably just looking to get back up to the top of the range, so it's more of a scalp. And you're probably willing to buy more below 24 or below the low of the day if we get there. But your probability of making money is pretty high. Disappointing follow through on 25. It's relatively expected. You know that you're probably not going to get. You know that bar 25 is probably not going to look the way bar 28 did. Why? Because the bear channel down was pretty tight. So we're probably not just going to rocket straight up. It's more likely that we're going to have to pull back first, which we did. We did on bar 25. 26, another pullback. It's possible that some of the bulls who bought let the reversal go against them on 25 and did not like how it looked. Remember, if you're buying, you're willing to take one reversal against you, and the move down on 25, creating that tail, might be that reversal. So 26 makes traders probably a little bit less sure, but it's a bad low one for the bears. 1 pullback, 2 pullback, 3. So probably buyers below here if we get there. However, we ended up getting buyers before there. Traders bought the close of 26, did not let it trade below, and we got a bull bar, not quite closing near its high on 27, but it is an II pattern, which is a triangle. So a bull breakout attempt and then a triangle as a pullback. Let's look at this on like a 1 minute chart. I'm actually curious. It's going to be some sort of bull breakout, like a couple of bull. This is what I'm imagining. A couple of bull bars and then some sort of triangle forming sideways is what it should be doing. Okay, so the bull breakout, not very clear on this time frame, maybe on a 2 minute. I suppose it was a bull reversal, if anything. So a bull reversal, so it's not really very clear, but inside patterns are triangles. I suppose that 24 was a reversal bar, not just a strong bull trend bar like 28. So more of a reversal up and then a bull flag. But either way, reversal up and bull flag is obvious on this time frame as well. You can buy above 27 after the inside pattern because we're low in the trading range. Generally, when you're getting a trading range day, it makes sense to just, these little dashed lines represent the bottom third. And this is the middle, and then this represents the upper third. So anything up in here is the upper third. Anything down here is the lower third. And when you're in a trading range day, you want to buy in the lower third. You want to buy small bars in the lower third with wide stops and be willing to scale in. And you want to sell small bars in the upper third with wide stops and be willing to scale in. That's probably the recipe for success on trading range days. But anyways, an II pattern on 27. And then a huge bull surprise, 28. Good for the bulls, yes. But normally, by the time it becomes clear, like it did on 28, the move is probably most of the way over. So it is by the close on 28. Let me just get this how I want it. It is by the close on bar 28, but I'm not sure how much higher we're going. Probably a pretty quick scalp, if anything. 29, disappointing follow through for the bulls. It's a small bull bar. It might be the start of the channel. So 27, 28 is the spike. 29 is the pullback, and it's possible we're about to start the bull channel. 30, follow through for the bulls. It's a 4-bar bull spike, 27, 28, 29, and 30. We're probably going to get a second leg up from it. But you have to keep in mind, we're in a trading range today. And when you're in a trading range day, you know that that spikes like this, what traders are really seeing is that the risk is really large, and now you're at the top of the range. So it's not as worth buying up here. Same way that while this spike down was strong, it doesn't break out of the low of the range. So what traders end up seeing is big bars, big risk towards the bottom of a trading range, not as good as it could be. 31, an inside bar. For the bulls, it's kind of tough because you don't really have to exit below it, but you don't want, any sort of big bear bar, and the momentum is drying to the upside. So bulls, if you're buying above 24, you should be able to make, the traders who bought above 24 did a good thing and a reasonable thing. So those traders should be able to make 5 points. So the market needs to go to 4639.75. In order for those bulls to make 5 points. And you can see bulls instead bought the close of 31, knowing that if we started to pull back too much, it would get disappointing. So they bought the close of 31, causing 32 to bounce. But now we're in an area where bulls are probably going to start taking profits up here. Then buy the close bulls up here and up here. We're never really let out. So we're probably going to get back up here, which we did 32. And we get profit taking 33. It might be a wedge, 28, 30, 32, something like that. Maybe a spike, and then this was the pullback, and now this is the channel. But it's a bull micro channel, right? So we haven't traded below another bar since bar 24. So it's not really worth taking any of these shorts like bar 33. Most likely the bears need a micro double top. 34, another bull bar, but it's pretty climactic, and we're towards the top of the range. I think that bulls are going to start to look for a place to exit soon rather than get, some sort of breakout. And the reason, it's better to not be hopeful of a breakout in this situation is because when the market tries to break out, it makes it pretty obvious, like it did over here. It's pretty easy to get caught holding up here, just hoping you end up getting some sort of really good bull bar and break out to the upside. And that'll happen occasionally, but it's more worth it to just scalp out of trades when you think it's in a trading range day and just look for the next trade, especially up in this kind of area. 35, still possibly a wedge. Three pullbacks, or so one pullback, two pullback, three, and then a reversal down. 35, I'm not selling. I think that we might get a second leg sideways to down, but the bull micro channel up since bar 24 is a little too strong. It's an 11 bar micro channel, so I'd rather wait for a micro double top. You can see buyers below 35 during 36, but a bad high 36 at the top of a trading range. There's probably going to be sellers above this bear bar. Reversal down 37, bear bar closing near its low. This is a more credible sell. It's a micro double top, a lower high, a small lower high, but still a lower high. You could say, this is the high of the double top, and 36 is the low. So you could sell looking for a measurement move down of the neckline down here. 38, follow through for the bears. It's a good bear bar closing near its low. We're probably going to get a second leg sideways to down from 37 and 38. It's consecutive bear bars, but you're now in the middle of the trading range, so it's not as good as it could be because your risk is pretty big putting a stop above 35. Notice that gaps fill in trading range days, and when the bulls broke out above this trading range here, or tight trading range, you could argue, 24, 27 double bottom. This is the neckline. Regardless, it's pretty clear that we have three bars where we had the exact same price here, which is a ledge. It's not as strong of a ledge as 4. But 3 is still a form of a ledge. We ended up getting the breakout. So this is going to be a magnet. And that's exactly where we went to over here. It was down to this magnet, the 26, 27, 24, 25, sorry, 25, 26, 27 high. But you don't have to exit above 39 if you sold 37. I would probably not sell 38. I'd just kind of let it go and see if you get follow through. But you don't have to exit above 39. There's probably sellers above there because 4 straight bear bars should get a second leg sideways to down. And 40 is that second leg sideways to down. So if you were short for any reason, I still think this looks like a leg in a trading range. And we pulled back above 36. We pulled back above 39. So it's maybe 1 pullback, 2 pullback, 3. So third leg down in a trading range, 40. And, pretty big risk. And we're at the magnets towards the bottom of the trading range. I think it makes more sense to get out of your trade towards this close. And, you're able to make 4 points, which is fine on a day like today. It's ideal to scalp for 5 points, but a lot of the times, you're not going to be able to make 5 points because the daily range is so small. So you have to, be willing to adjust with what the market is doing. Reversal up 41, but a big tail on the top. I'm not really willing to buy. I'd just rather wait and see what happens. This is the middle of a trading range to me. 42, a huge bull bar, a bull surprise, closing near its high. You can buy it. The problem, it's a midday reversal. We're probably going to double the daily range still, I think. And it's a huge enough bull bar that we're probably going to get a second leg sideways to up, and it could be the breakout. So it's worth buying. But if you're still, thinking, trading range, big bar, big risk, I'd rather wait and see what happens, that's probably okay too. And you can wait for 43. But 43 is not really a great bar. If I bought, I wanted to see 43 close on its high. We're early in this range. So why is 43 not closing on its high? That's kind of disappointing to me with the huge tails on both sides. And mainly that 43 had such a big tail on the top. It should not have a tail on the top. It should look closer to more like 42 if this is going to be a huge bull trend. 44 overlaps with the 7 and 16 high. So you can see over here, we traded back down to the bar 7 high and the bar 16 high, which is pretty disappointing, right? If you wanted to create an open gap over here, and instead you got 44 overlapping with those two pieces, or those two breakout points. So it's rather disappointing. Why are we, only 2 or 3 bars, or basically 2 bars into this, and we're already getting a doji bar? To me, this is getting disappointing, and it might still be a trading range. When the market goes sideways for a long time, the breakouts usually get more violent the more sideways the market goes. So I'm looking for a pretty violent breakout here, and instead, it's already losing energy, and we're not that far into it. 45, a bear bar. It's possibly a bull trap. 42, 43. We might have to test back to the 41 high, since the bears who sold above it should be able to scale in higher and make money. However, I did not like that 45 didn't close on its low. I was willing to take it if it was able to close on its low, or if 44 had been a bear bar closing near its low as an inside bar. I thought those were both credible bear traps, or credible for betting this was a bull trap. You could still probably sell 45, but I was disappointed that it had a tail on the bottom, and I decided to just wait. And, no one else did. So everyone else decided to take it. And that's why you get a huge bar 46. What is 46 more? It's probably more bulls who were excited and hoping they were getting the breakout 42, 43, disappointed for 44, 45, and they're exiting. And that's what's probably the main piece of causing 46. 47, some follow through. Some bears will sell the close of 46. It's not great, though. And then by the time you get to 47, you're selling really low in the trading range. It's still a trading range. We had big up 42, 43. Now we have big down 40, 46, 47. And 47 doesn't break out of anything. So now you have really huge risk and you're not getting the breakout. So you have big risk in a trading range, and it's probably better to just wait at that point. Sometimes, by the way, it will collapse here, but it's probably better to just, sit out of those trades, the winning ones, because, the losers are going to be far more often. You can just wait for the breakout. Reversal up 48, more due to a lack of traders willing to short. And that's why you get the reversal up. Bulls hoping this is a bear trap, and they get a big reversal up. But I think, sideways is the most likely scenario right now. I think for the most part, bar 49 is due to bears buying back shorts. So consecutive bull bars, but big tails on the top. 48, rally, and then pull back, and then second leg up. So causing 49. So it could be 2 legs up. Again, this is trading range price action. And right now on that, we're near towards around the open of the day. So I'm not expecting very much from either side here. 50, a doji bar, disappointing for everyone, I think. Probably better just to wait and see what happens. Bulls are hoping we're going to get a breakout pullback, maybe from 47, 48, and some sort of good second leg up. Bears are hoping, second leg down from 45, 46, 47. But I'm not sure how big it's going to be. Again, 47, 48 was pretty dramatic. We'll probably get back to the bar 47 close because 45, 46, 47 is so strong that we're going to get a second leg sideways down from it. But I'm not really all that confident in the bears to get that much more to the downside. 51, another bear bar, but a tail. So it's consecutive doji bars. Again, not really good for anybody. 52, a bear bar closing near its low, but possible trend line are down here. 50, 51, 52 could be, down on 50, up on 50, down on 51, up on 51, down on 52. Could be a wedge forming on a lower time frame. So not really all that great. You can see probably sellers above 52 though, scaling in higher. Could be bears, they want a sell-off and then 2 legs up with 53, and then they want a reversal down. More likely, I think, sideways. 54 is a low 2 short, and you can take it, but it's hard to sell when we're so low in this trading range. I'd probably rather just be flat. 55, follow through for the bears. It's a good looking bear bar. Bulls, they want some sort of double bottom with 48 and a reversal up. Bears, they're hoping that we get a a follow through bar on 56 and a breakout below the low of the day, probably more likely we would get reversed back up into the trading range. 56, a bull bar, I thought it was okay to buy, at least a 40% chance that you buy and you get a measured move up of the neckline here. So double bottom, maybe a bull flat. So as you could argue bull breakout, and this is just a pullback and you get a double bottom bull flag and then you get a measured move up. I thought it was reasonable to buy above 56, but you need a wider stop. You know that you're in the middle. If you take this, so this is the spike, and then in the range after from 48, we are in the exact middle of the range buying above 56. So it's not as good as it could be. Disappointment, 57, a bear bar closing near its low. But again, I'm not willing to sell that. I think you're selling, potentially a third push down low in a trading range. So it's not worth selling. So okay to stay long. Disappointment, 58 for the bears. It's an inside bar. It's a high one buy for the bulls. So they're hoping that 56, a reversal, and 58 is the high one. 59, a bear bar closing near its low. It's a double top with 57, the second reversal down. So better for the bears. But I'm not really confident in any breakouts for the bears today. 60 follow through for the bears again, but I think this is just going to be a trading range day at this point. I'm not really willing to do anything. If you bought above 50, 56, you probably have to have, again, a wide stop and probably buy more below the low of the day. And if 61's a bear bar closing near its low, then you just exit. But the bears have been failing to get breakouts all day. It's been a trading range day, and it's the bottom of the trading range day. There's going to be buyers below 12 more than likely, and you get him on 61. However, 61 is disappointing. It's not able to close on or near its high. Bulls were hoping wedge, 51, 55, and 61. But instead, we got the wedge, but this is not a very good looking bull bar, 61. So do you buy above 61? I would rather wait. And then 62, disappointment. If you bought, you can see the bulls who bought here, they scaled in lower and they're using this to get out. And then 63, more follow through, but we're still not able to get a close above the moving average. So it's really disappointing for the bulls that we can't get a close above the moving average. And then we get a bear bar closing near its low. It's more of a doji bar, but again, still bears argue bear channel and we're at the moving average. They're going to sell or reversal down from the moving average in a bear channel. And that's what happened in 65. 66, another double bottom. You can buy it, but same thing, wide stop. You're scaling in and using the rally to get it around break even. And we just pretty much went sideways, and we never really gave either trader a chance or either side a chance towards the end of the day. So like I said, these are pretty unusual days, but they do happen from time to time. So interesting pattern on the open, the same as yesterday. You could sell below 2, but either scale in. You could scale in or just use a tight stop, but I don't really want to use a tight stop. I think you're going to lose too often to continue to take that trade. 7 makes sense. Maybe you could sell the low 1 on 10, but hard to do. And then follow through 11. Maybe it's sell the close, but it could be a second leg down. 13, a credible low of the day, and 7, a credible high of the day. Most likely, I think when you see 13, that this will be the low or this will be the high. Didn't happen today, but I think most of the time that will be true. Buy the close, but tough to do this high. I would not sell any of this. This looks like a leg in a trading range to me. 24, a good looking reversal up. You can buy, but tight channel down, so might go a little more sideways first. Buy the close, yes, but middle of the trading range. 37 makes sense for, a couple points down, 2 legs sideways down. You can buy 42, but you got to get out below 45. Do you sell 45? Well, it makes sense. It's possibly a trap, maybe a giant wedge or something, but I think that, the tail on the bottom was discouraging for me. So probably doesn't not make sense, but I don't know. Just the tail on the bottom kept me out. Follow through for the bears, but hard to sell down here, even though a lot of, technically sell the close bars, but it's been a trading range all day. And I think you can buy with a wide stop and you can buy with a wide stop, but, harder to do. And you have to be pretty confident in what you're doing. The daily chart, we have disappointment for the bulls. So maybe we're going to end up getting some sort of bear bar tomorrow. I'll be interested to see what happens with this if the bulls decide to exit. I don't know, maybe 30% chance we get a really solid bear bar tomorrow and the bulls just give up and this becomes a trading range. I still do think we're probably going to get back to this high, and I still think this is probably a final flag. The weekly chart, I think I'd just go. Yeah, we don't need to go to the weekly chart yet. I had one other thing I wanted to discuss. I was looking at monthly charts earlier today, and I just think Under Armour is an interesting stock right now. It's pretty, it's pretty beaten down, and you can get it for $6 or $7 right now. And this is my logic is that if a trader was to buy this, it's reasonable. It was reasonable by the close bars up here. So the December 2023, traders who are buying here and scaling in lower above a bull bar are probably going to be able to make money. So you figure if you bought more above the May bar, then maybe a 60-70% chance or something like that we get in here in this area. And it's not all that likely that Under Armour. I think everyone listening to this video knows what Under Armour is, so it's not all that likely it's going to go bankrupt. So it'll be interesting to see how the July bar closes. But if it's good, you can. I thought potentially reasonable to buy that we get maybe even close this gap here with bar 13. Again, just my opinion. But yeah, I don't know. All right, that's the day.